The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And as we continue our coverage from the agmarket.net Farming for Profit Not Price Conference in Nashville, Tennessee, let's get some technical analysis of what we are watching in these markets. Joining us now, Brian Splitt with agmarket.net. Brian, good to see you, my friend. How are you?
It's great to see you. It's always good to see you in person as well. I'm doing great. We're excited to be here. Fantastic crowd and a lot of good speakers. So we're super pumped about the conference this year. Absolutely.
I was going to say, we get to do this a couple times a year. We usually see each other at the conference here or Commodity Classic, et cetera.
Right.
You know, we get to see each other a few times in person and catch up and talk markets. And I know, speaking of good speakers, you just finished up your talk here to the conference attendees and kind of taking a look at that technical picture here in these markets. And, you know, everyone's talking about tariffs and all this talk, but bring it back to, you know, the technical picture right now. I mean, what are you seeing in these grain markets? Is there any clear definitions of where things sit right now, Brian?
Well, Jesse, so I would say that kind of the theme, whether it's old crop corn, old crop beans, new crop corn, new crop beans, was that we started with a negative tone last night, obviously, and we had opened below Friday's lows, and things looked negative. But all four, again, old crop, new crop corn, and beans, held their uptrends that have basically been in place since December. And we rallied off of those lows. And then after rallying off of those lows, we ended up trading above Friday's highs in all instances as well. So we'll see what type of gains we can hold into the end of the session. But I think all of those products have defined a new level that these markets need to support to keep the trend intact. And these lows that were made in the night session coming out of the weekend are going to be extremely significant for the health of the trend of the market.
I think about this. We get headline risk like this into the markets, and it's a talking point. It can move things around, but at the end of the day, it always comes back to the fundamentals of the trade, right, Brian?
It does. I mean, I think the technicals are kind of the roadmap, but they're not what is causing the move. The fundamental outlook and what's happening is what is causing the actual moves. Now, I think the technicals can maybe exacerbate that. So what I mean by that is, all right, maybe the fundamentals last night looked bearish because of the tariff talk. Yet the bigger picture friendliness of the market still supported the market where it needed to be supported. Now, if we have additional bearish information that comes into the fold and we start taking out those support levels and taking out those trend lines, then that exacerbates the selling and brings in more selling because the level didn't hold. So it's a hand-in-hand relationship between the two. And I really look at technicals as if this happens, then this is the next likely outcome. You can't just look at a chart and say, okay, well, it's going here. I can say, okay, well, if we can, if corn were to break down below the lows that were made, Sunday night out of the open, then this is the next likely level it's going to try to get to, right? So it's a combination of the two hand in hand.
We've talked before, and I know a lot of folks are kind of making their guesses on what the acreage estimate's going to be here in 2025 in the U.S. And, for some time now, it sure doesn't seem like that we're trying to buy any soybean acres with the way this ratio is between corn and beans right now.
It doesn't. And I will tell you that just about everybody on stage during the conference talked about bearish soybean fundamentals. Yet I was on stage talking about why the market looks like it wants to go higher in soybeans. And it was really just based on the what appears to be a very defined possible head and shoulder bottom on new crop soybeans. Again, we're holding the uptrend. I think, again, when you kind of lean back on the fundamentals of it, we trade futures. We don't trade, yesterday's or last week's. And I think the idea of a large South American crop is well known at this point. And maybe, just maybe, the crop isn't as big as we think it is. We've seen, obviously Argentina go backwards a little bit. Mato Grosso in Brazil is like the sweet spot of very good production, but I think central to southern Brazil has some issues. So we just saw the funds go long soybeans at the beginning of the calendar year, and their fund length in corn is very mature. Now, the funds obviously sniffed something out in corn months and months and months ago. Are they sniffing something out in soybeans, if you will, that has them wanting to be long? And that is counter to what the general narrative of the marketplace is right now, which may be why, if it does get through some resistance here, why it could go higher than people think. I also think soybean meal has an interesting story. We've got the fund still short there. We had a monthly reversal higher on soybean meal in the month of December, and we've been very close to its downtrend. And I think if soybean meal can take out its downtrends, we're going to have a heck of a short covering rally there, which will help crush margins, which will then help support the soybeans themselves. So I think there's things that could be in the works here in beans, and we'll see. Hopefully it pans out to the upside. Not to mention, we are going to make the spring average for crop insurance the month of February. Mm-hmm. And if beans can gain a little traction in this period of time versus corn, then maybe we can get some of these bean acres back.
That's a great point. What about the wheat trade? Anything big you're watching across all three complexes here as we start February?
So I think it's interesting that one of the only grain markets that was higher after the night session finished up as we went to the beginning of the day session was the spring wheat, oats. And so you'd think about, products that the Canadians grow. And so there was a level of support under there. Then you think about the level of shorts in soft red and hard red wheat. I think the soft red fund positioning was short about 110,000 contracts. That's a pretty sizable short. And I look at the May soft red, so that's the Chicago variety. It looks like a head and shoulder bottom in that contract as well, very similar to the new crop soybeans. And so I think when you look at world stocks and world stocks to use, it's really not a bearish picture. I think the funds have just been selling corn or selling wheat as they've been buying corn. And a lot of times they do that where they don't just buy all three of them at the same time. They'll buy one and then they'll sell the other. And I think that might catch up to them here in the short term. I think you've got some production concerns in India, and India might need to become an importer of wheat here rather soon. So we'll see if that's part of the narrative that helps this wheat market. But I do think we've got 40 to 50 cents of upside in front of wheat right now.
Any thoughts in the livestock sector? We saw a friendly cattle inventory report on Friday. Futures have kind of been bouncing all over the place, though, on Monday. Any thoughts for you in this cattle market?
So we dealt with the amount of cattle in the country, right? We got that news, and it was at the lowest since 1951, right?
Something like
so that's friendly, but we kind of know that. We know that the cattle herd is small. That's not new news. We also know that with the lower amount of cattle in the country, that we are still, from a tonnage perspective, producing a decent amount of beef, even though the amount of cattle in the country are low. So at some point, when we look at what's going on with the tariff talk, opening up the border to Mexican imports again, I think is going to be something that will have a negative impact on cattle. The funds are record long, live cattle and feeder cattle. And so it's just a matter of reaching that point where the futures advance because the cash market advances, and then you're going to get to a point where the cash market advances and the futures just don't want to go to where the cash is, and then you see things turn the other way. And I just wonder if maybe we don't make some kind of a high, even if it's a short-term type of a high, on a bullish news, right? Mm-hmm. Which is the size of the cattle herd. Are we going to make that's the reason they have the buy the rumor, sell the fact saying in the first place, right?
Brian, anything final you'd want to reiterate to folks? Anything else you're paying attention to here?
Yeah, Jesse, it's just a different market than we were trading several months ago, and I think we have to be mindful of that. The energy in the market's different. The trading ranges are larger. The frequency of what I would call, market impacting information is ramping up, right? So the frequency of news that moves the market substantially is increasing substantially as we've gotten into the new administration and all of the efforts that they're putting in. So I would just, caution producers to really contemplate how they participate in the market. Do you want to even be in futures right now where you have a position and then something happens when the market's closed and now we make this big move or we gap one way or the other? I think this is a market, and at least for now, because the options are still relatively cheap based on the type of volatility that we're seeing, where this is an option buyer's market. Point yourself in the direction that you want to be pointed in. Don't worry about, if something changes over the weekend or some major news drops while the market's closed, and just manage your risk.
Brian Split with agmarket.net. Always good to talk with you, my friend. Thanks for joining me.
You too, Jesse. It's always great to see you, buddy.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.